Inflation is finally back at 2%. Is this the light at the end of the tunnel? This has been a very, very long time coming. 2.5 years, pretty much to be exact. And we are finally here. We finally hit Bank of Canada's target of 2% inflation. So what happens next? Annual inflation cooled sharply to 2% in August, according to Statistics Canada, making a major milestone in the Bank of Canada's efforts. That's a half percentage lower than the 2.5% annual rate recorded in July and continues a general cooling trend through 2024. The last time inflation was at or below 2% was in early 2021, so 3.5 years ago. Cheaper prices on gasoline. Without that, we would have been at 2.2% in August. And then groceries, of course, went up 2.4% annually in August, up from 2.1% in July. But on a monthly basis, groceries actually went down 0.2% since July. Now, obviously, because of the way inflation works, prices aren't getting cheaper, they're just rising at a slower rate. And that's exactly what they mention here, is that monthly cost hikes should remain more reasonable going forward, and that the path for the Bank of Canada's benchmark interest rate is clearly lower. Given the economic backdrop, I don't see any reason for inflation fears to crop back up anytime soon. CIBC economist projects that a further 200 basis point of interest rate cuts are in store between now and the end of the year. I'm assuming that's 2025, bringing the policy rate to 2.25% in an effort to kickstart the economy. So 2.25%. 200 basis points of cuts, this gentleman thinks. And they expect that central bankers will slash their policy rate by 50 basis points next month in an effort to expedite the return to a more neutral setting. Royce Mendez, head of macro strategy at Desjardins Group. However, money markets are pricing in 25 points, a basis point cut at each of the last two monetary policy meetings of 2024. Expectations of a 50 basis point cut rose to 47.5% from 46%. So markets think we're going to get 25, but there is basically a 50% chance that we get a 50 basis point cut. Now, my opinion on this, not being an economist and just being a realtor in the Fraser Valley, is that they probably should cut 50 basis points, and I don't think they're going to do 25 bips per meeting from now until the end of 2025. I think somewhere along that trajectory, there will be a bigger than 25 basis point cut, whether it's next meeting, the one after that, or the one after that. I don't think they're going to follow that trajectory down to a T exactly how they planned, because that's not at all what happened on the rate hike trajectory. So I doubt it's going to be the case when they're lowering interest rates. Now, all this being said, I'm not here to tell you what's going to happen with inflation or interest rates, because like I said, I'm a realtor and I'm not qualified to do that. But what I do think is likely going to be the result of this is that the buy window to pick up a property is likely going to be between now and February 2025. And my rationale for thinking this is we're going into the spring, and the spring, seasonally and historically speaking, prices go up. Now, I'm not saying that they are going to go up in the spring, but we have a bunch of positive, a confluence of positive indicators. Like, typically the spring prices go up. This year, prices are going to be much lower than they were last spring and even in 2022. And we're also going into this spring with much lower interest rates and a much more positive sentiment. Maybe not than 2023. I mean, the sentiment was pretty positive in 2023, but regardless, we're going into the spring with a sentiment that's a lot more positive than what we're seeing right now. So prices may not go up in the spring, but I do think there's a very good chance there's going to be a whole lot more competition in the spring. So if you want to buy something, there's going to be more buyers out. You're going to have to move quicker. You're going to maybe end up having to act out of emotion on certain deals. Whereas right now you have time to think, and there's a lot of inventory to choose from. You have negotiating power. You can get an accepted offer. You can likely renegotiate that offer after the inspection report comes back. And then if we just, project that out to next fall, if things stay the way they are right now or similar or possibly even get worse, we're going to be looking at much, much lower interest rates by the fall. So you would probably want to be in before then. Now, this is definitely not financial advice. Do whatever the hell you want to do. This is just my opinion. And, I put my money where my mouth is. I bought a home in October of 2023 last year. So, you know what? By my projections now, maybe I bought early, but I'm definitely not down on my investment. I just have a ridiculously high interest rate. And I would be buying right now if I was planning to buy something to live in, right? If you're an investor, there's a bunch of arguments that, maybe there's a better place to put your money. But if you're buying something as an end user, I personally, given everything that's going on and what we've seen happen in this market in the past, I would probably want to be in before everybody else starts thinking about getting in. And if you're interested about buying or selling, give me a ring. I'm that Agent Kelly. I'm making moves to move you. Peace.